Well, good morning, Sequoia. This is Alan Wu. Um, we are doing things a little bit different from now on. Used to be that we have lunch with Sequoia every Friday, but many of our agents will not be able to attend, but they do have questions to ask. So we decided to do something called weekly question and answer, so that now you can actually ask your question anytime that you wanted to. And once we receive the questions, and we will make a video like this and to answer all the questions, and we post onto our YouTube channel also. So now you have a new ways to send questions to us. Log into your back office. After you log in, look at your left-hand side, your left menu. You will see something called training. Click on it, and you see the first tab is called submit questions. So all you have to do is just to click on it, type in your questions, we will get it, and we will respond to your questions in a video like this, okay? So let's start off with today's Q&A. There are approximately 7 questions right here. So the first questions that we have, it's what is the process for acquiring a loan for our clients? Now, this question is actually very, very high level. It really depending on what type of loan are we talking about. Are you talking about fix and flips? Are you talking about 1 to 4 unit? Are you talking about business loan, capital, working capital, so on and so forth? So without knowing more detail, all I can do is to give you the overview or a very high level answer to this particular questions. So the first thing that you definitely need to do is to submit a scenario form. The scenario form is under your website, under the product tab on the top menu. Click on the product tab. You will see all type of loans that we provide for our client. So submit one of those appropriate scenario form for us. We reviewed it, and from that point on, 2 things will happen. Number one, three things will happen. Number one, after we review the information and this is not a durable loan, we will just reject it. That's the first thing. The second thing is, after we see it, it's a pretty straightforward loan. For example, you submitted a 1 to 4 units and 1 to 4 unit purchase. You gave us the purchase price, the credit score, so on and so forth. It's pretty straightforward. Then we will respond to you with a rate and term. Now, always remember, when we respond to the email, we always responded to you and the client, unless you specifically let us know that, hey, you don't want us to contact your client, anything goes to you first, we would definitely do that. But without telling us that, we have to, and we are going to respond to both you and your client with a rate and term, okay? And that's the second thing would happen. The third thing would happen is we don't quite understand what the deal is. The deal sounds durable, but we need more data. So in this case, we will respond to an email, either asking for more documentations, or we ask for a 3-way conference call so that we can understand the detail of that particular deal. So once we send out all these, and let's assume that the deal is durable, we send out to the client the rate and term, the client likes it, and then the next step would be going into processing and underwriting. So processing, we collect a whole set of documentations based on that particular deal, and you help us out by following up with the client for the documentations that we need. So for example, let's say it's a working capital, we need bank statements, we need financials, tax returns, and things like this. We will send out a list of documentations to everyone. So please help us out, follow up, and get those documentations to us. And once we receive everything, we can start the processing, and we will submit to the lender for underwriting, and so on and so forth. So in a very, very high level, that is what the process would look like for getting a loan for our client, okay? So if you have any specific question for specific type of loan, then we will be able to give you more specific questions. Okay, so that's the first one. The second question is what step to take when assisting clients to get a loan. So we have done a training for interview your client. Now, this question is also very similar to the first one. It really depending on what the client needs, what kind of loan he's looking for, how much is he looking for, et cetera, et cetera. So I would suggest you to watch one of the video that we make about, I would say about 6 months ago. You go to our YouTube channel and you will see it. Watch one of our trainings called Interview Your Client. There are specific questions that you need to ask. For example, what do they need the money for? How much do they need it? What their credit score is? And if they're purchasing investment properties, is the investment property fully occupied? So on and so forth. So go ahead and watch that video. Hopefully that video will answer most of your concern, because questions like this, it's very, very high level. It's very hard for us to pinpoint exactly, what that specific scenario would be. Okay, so this is number 2 questions. The next thing, someone's asking, can we fund projects in the U.S. Virgin Island? I would, add another things to it, is that can we fund project outside of the United States? The short answer is yes. I always say, we do not just pass anything along. We would love to look at all deals, but however, the reality is that funding outside of the United States is not as easy as within the United States, even though Virgin Island it's a U.S. territory, but they have their own laws, and they the underwriting guideline is so much different. So for anything that's outside of the United States, it's always case by case basis. Now, the only type of funding that we will fund, it's related to real estate, whether it's multifamily, hotels, office building, apartment building, so on and so forth. So anything that related to real estate, we can take a look at it. Now, we also have clients come up to us saying that, hey, do you fund, working capitals outside of the United States? That is something that we cannot do. Okay, so anything that related to real estate, and also the loan amount got to make sense. We don't, anything outside of the United States, we don't fund anything that is below $10 million. Well, if you're talking about in Canada, I might be able to do it in 5 million. But other than that, the bigger the loan amount, quite frankly, the easier for us to attract lenders to look at it. So again, anything that is outside of the United States, I would suggest you look for anything that's at least $10 million and above. Okay, so that is for this particular questions. Next one, how to get an approval. This question is asked by one of our real estate agents. Her concern is, well, not a concern, but what she wants to know is that, hey, can we give a client a pre-approval, and so that when they write up an offer, instead of 30-day contingency, they can shorten to 21 days contingency, or even less time for the contingency to make the offer much stronger. Yes, absolutely. In commercial, remember one thing, in commercial, we do not send out pre-approval. We send out LOI. The difference is pre-approval letter, it's actually approved on that client. So when you go to a traditional mortgage company, they will give you a pre-approval after they looked at the client's income, tax returns, financials, so on and so forth. Then they will give you a pre-approval. Okay. However, in commercial lending, there's no such thing as pre-approval, but we have something called LOI, letter of intent. Why? It's because all real estate property we can fund, because again, we are looking at the property itself. So obviously every property has a value to it, and we can fund 100% of the property as long as the number makes sense. So for example, you're buying a warehouse, and the warehouse worth about $500,000. Can we fund it? Yes, absolutely. But we might not be able to fund it 80% of it. We might not be able to fund 70% of it, but we might fund 50% of it, depending on what the situation is with that particular property. So we always can send out LOI, and LOI could be very easy to do. All you need is to submit a scenario form, and in the no section, okay, in the no section, just write out saying that, hey, a client is looking at this property, we need an LOI from you guys. So once we looked at it and once we look at the numbers, we can issue an LOI to you very, very quickly. Normally within a few hours, you will get it. Okay, so it's not that difficult. So remember, that is why commercial lending, commercial loan, it's a lot more simpler than residential mortgage. Again, right here, we do not look at their income. We do not look at tax return. All we look at is the value of the property. We look at the market rent of the property, and we use something called DSCR. So we can fund based on DSCR. So whatever the DSCR comes out to be, let's say we can fund 50%, 60%, 70%, whatever that might be. And we can always fund it. Now, of course, a lot of the agent or client will come up to us saying, hey, can you fund 80%, 85%? No, the minimum down payment for 1 to 4 unit investment property is at least 20%, but that still have to base on DSCR. It's not about if I can fund it or not. It's about that particular property. Can it qualify for that type of mortgage? So give you an example. We have a lot of clients in the Bay Area that's sending us deals. And yes, the value of the property, it's very, very high. It could be, $500,000, $700,000, $800,000 property. But however, the rent is quite low. Okay, so we fund the property based on the income of the property, which is the rent. So let's say, for example, you have a property that's worth about $800,000 and you only rent it out for $2,000 a month. There's no way that we can fund you 70% of the $800,000. Probably we can fund you 50% of it or even less, right? So that is why what we call DSCR, debt service coverage ratio. So remember one thing in commercial loan, we look at the income of that property. So yes, to answer this question, to get you a pre-approval or an LOI, yes, we can definitely do it. So just submit a scenario form, and in the note section, let us know what you need. Okay. Next thing, client is asking, agent is asking, a client already has a business and looking for $250,000 to $300,000 to expand. The client does not have any real estate collaterals, and he's asking for, besides a working capital, what other options do we have? So first of all, with somebody that already have a business and looking for money, that is quite easy. It's not difficult to do as long as they can provide the income statement. So lender definitely need to see their financials, such as tax return, debt schedule, profit and loss, so on and so forth. And sometimes we do need to look at their personal financial as well. It really depending on how the company structure is. Does the money flow through the business and going into the personal account? There are all kind of possibility out there. So we do need to look at financials. Okay. Now, getting a $250,000, $300,000 loan, can we do it? Well, the short answer is yes. But can they qualify for $250,000 to $300,000 loan? Then now, depending on the financials. Okay, we have client come up to us saying, "Hey, Alan, I need $2 million." Okay, fine. You can ask for whatever you want to ask for, right? But can we get it for you? It really depending on the business. So remember one thing, consultants, when you go out there to talk to clients, they can ask for whatever they want to ask for, but always let them know, hey, the loan amount is really depending on your business, okay? Not based on your wish. So now for this particular question, is saying that they don't have a real estate collateral. Most of the cases, that's fine as long as the business can support itself, right? So let's say you're generating $2-3 million a year and you only asking for $200,000-$300,000. Absolutely, you don't need real estate collaterals to go for it. But however, if you generate, the income is only about $1 million a year, but now you're looking for $200,000-$300,000. Now, in some cases, the lender will ask for some sort of collateral, or they will reduce the loan amount to get into the comfort level. Okay. Besides a working capital, Yes, there are many other options, but normally working capital will be the cheapest for our client. It's a long-term note. Normally, working capital is a long-term note. But if you get into business loan, sometimes we can get it for 2 years, 3-year business loan. We also have cash advance, but that is very expensive. It's for emergency use only. So depending on how urgent the client needs the funding for, then we can put these things together. Okay. So working capital, submit a working capital loan. And once we look at the number, and we can tell you what are the options that we can provide for our clients. Now, remember one thing, if the client is looking for anything that is less than $100,000, it will be, I shouldn't say not possible, but would be a little bit challenging. It's just because not many lenders out there are funding loans that is below $100,000. We have a few, there's no doubt about this, but compared to, somebody that asking for 200, 300, 400, 500 and above, the bigger dollar amount, we have a lot more lender and a lot more options. Okay. So yes, we can definitely do it. Submit a working capital scenario. We can take a look at it. Next one is how to purchase with an LLC. Well, first of all, we are business loans. So all the loans that we fund need to be, well, I would say 99% of the time, the loans need to be funded to an LLC. So if you're talking about working capital, most likely they already have a business. And for example, like a restaurant or a spa or a bookstore, or whatever that might be, right? They already have an LLC. So you need to apply from that LLC. Now, however, if you are purchasing real estate, in this case, you can set up an LLC yesterday and use the same exact LLCs to apply today, because in real estate, we don't care about the seasoning of LLC. There's no such thing as seasoning of the LLC. And as a matter of fact, a lot of our clients would do something like this, where when they purchase one property, they would just set up an LLC and use that LLC to purchase that property. So I would suggest the clients to talk to their CPA. Setting up LLC, it's quite simple, and quite frankly, many of them can do it themselves online. It's not difficult. However, on the LLC, we do need a few things. After they submit, that is not just the submission, okay? Many clients come to us saying, hey, I've got an LLC. Hey, look, this is my submission. No, we need to see something called EIN, Employee Identification Number, EIN number. You have to submit the LLC to the county or to the city, and they approve it and will issue you an EIN number. And that is what we need. Okay. Once they have an EIN number, then we can apply for a loan under that EIN number. Now, many also ask, I just set up an LLC yesterday. How can I use it? All the money is actually in my personal account. It does not matter. That is fine. So because once you set up an LLC, let's say you purchase an investment property that require you to put down 30% down, for example, and that 30% is in your personal account, that is fine. As long as you can show that you or the client has the control of that 30%, we can use that. That is not an issue. Many of the client, after they set up an LLC, they will also set up a bank account under that LLC and move money into that LLC. That is fine also. So, however, we do need to see the trace of the money. Where does the money come from, right? So again, it's pretty simple. We do that all day long. And quite frankly, this is the only way that we prefer to fund any loans out there under Sequoia. Okay, last but not least, agent's asking if a client is purchasing a franchise, does he need real estate collaterals? So when I say franchise, is an SBA approved franchise. Now, how do you know? Again, all you need to do just to submit a scenario form to us and let us know that what is the name of the franchise. We can check for you. We have a portal, we can submit it in, and we can let you know pretty quickly if that franchise is SBA approved. If it is an SBA approved franchise, most of the time they don't care about real estate collaterals. Yeah, most of the time. But in some cases, let's say the client does not have any experience, they don't have too much capital, liquidity, and things like this, the lender might ask for it. We have done quite a few where we you know we never put it this way, we have done a few franchise capital, either purchase or open up a new franchise or need working capital, but we never seen them asking for collaterals for franchise only, right? But if for other businesses, yes, they are, the chance for them to ask for collateral is much higher. Okay, so this is all the questions that we have for this week, and thank you so much for all these wonderful questions. Please keep the back office under training and submit questions to us, and we will, once we collect all the questions, and we will do a training like this or film a video like this and put it onto our YouTube channel so everybody can watch it. Okay, until then, thank you so much, everyone, and I see you next time. Thank you.